Thank you for joining us. This is Business Incorporated. I'm Chimezie Obi Iwagwan. We welcome you to the program. Coming up on the show, Nigerian inflation slowed for 11th month in December, down 15.37%. Kenya secures a $750 million syndicated loan to pay off earlier loan. And South Africa's Eskom's bonds face suspension from Johannesburg Stock Exchange. Let's get started now. And here in Nigeria, the headline inflation rate eased further to 15.37% in December. This is 0.23% lower than 15.9% recorded in November, representing the 11th consecutive drop in inflation. Data from the National Bureau of Statistics released today shows food inflation dropped to 19.42%, while core inflation was also lower at 12.1%. Some of the highest increases were recorded in bread and cereals, potatoes, yams, and other tubers. Urban inflation declined to 15.78%, and rural inflation eased to 15.02% in December. And to the markets now, the Nigerian Stock Exchange has continued to outperform. The index was up 2.12% at Intra-Day, crossing the 44,000 threshold. The Jersey index was also up 0.56%. However, Egypt lagged 0.16%. Nairobi closed in the green 1.07% on Monday. And in the Middle East, the markets were all looking green at intraday. Qatar's stock market rebounded from a sharp fall the previous day. The Qatari index tumbled 2.5% on Monday because of heavy selling in the final half hour, ending a 7-day rising streak. Sentiment was hit after the United Arab Emirates said Qatari fighter jets twice intercepted Emirati civilian aircraft during routine flights to Bahrain, which Qatar denied. The Qatari index, which has been in a strong uptrend for the last several weeks, surged 2.58% as Masraf Al Rayan jumped 2.8%, and drilling rig provider Gulf International Services added 2.2%. Saudi Arabia's index edged up 0.65%. A Saudi company for hardware gained 2.3% after announcing a strategic plan for 2019 and 2020 that involves adding 7 stores, bringing its total to 40. In Dubai, the index was up 0.85%, while Abu Dhabi gained 0.29%. And in Europe, stocks were slightly higher in early trade as investors monitored the release of corporate earnings while keeping an eye on the euro, which hovered near a 3-year peak. Aside from the euro, all eyes are on gold prices and, of course, Bitcoin. Let's bring in my colleague in Frankfurt, Daniel Cook, to tell us more. Good afternoon, Daniel. Good to be with you again. A beautiful week. I wasn't with you yesterday.
Yeah, hi there, Chimi. A very beautiful afternoon here from Frankfurt. Yeah, I missed you yesterday. It's nice you're back on the show.
I missed you too, and I'm happy to be back. Well, gold is currently rallying on a 5-year price high. What are the key sentiments driving this bullion, and how should the rally be played?
Well, we have seen this rally of the gold price already happening since December. From December on, there was simply just one direction of the gold price, and that was really straight up. And also, when you look at 2017, during that period, gold was actually going up by 14%. In December, the gold price went up even $100 higher to a level of $1,340, the highest that we actually have seen since September. And yes, investors are telling me that they are thinking that this trend most likely is also going to continue. During the financial crisis, I remember also filing a report about this topic. During that time, gold was seen by many investors and also by just normal people as a very safe way to invest their money. But why gold right now is still still so interesting. When we talk about gold, we also have to talk about the oil price and also the growing economy that we are seeing not just here in Europe but also worldwide. Gold as an invest is still being used by many investors to be on the safe side when it comes to going up and a rising inflation rate. Investors think that with a weaker dollar that we are seeing at the moment, at least for a short time, this is also going to give the gold price another boost. And since gold, and that's why we have to talk about the oil, since gold and oil are both being traded in US dollars, it's still here, when you talk about the European perspective, still very interesting, because what we are mostly seeing right now here in the Eurozone is a very weak dollar and on the other hand a very strong euro. And with this, gold is still very attractive also for investors. Also, investors believe that even though the gold price will most likely go up, we are not going to see such a boost that we are reaching new records. With this exactly, also it's interesting for investors because there is still lots of potential to make lots of money with it.